afternoon, everyone, and welcome to Stock Market Today. Alyssa Corm and Ed Carson here with a breakdown of the action in today's session, where we saw some red across the board. The NASDAQ and small caps getting hit particularly hard today. And Ed, what is going on? A couple of stocks that we're going to be taking a look at that sort of exemplify the action that we saw today.
Yeah, UPS had a big fall today, and that seemed to drive some of the action today. And meanwhile, we also have PayPal and Mittal, both of them near buy points with earnings on the horizon.
Yes, it's a big week for earnings, so we are in the thick of covering all of that for everyone. But here is a look at the NASDAQ, finishing the day down 1.2%. The Russell 2000 down 1.4% for the day, the hardest hit. We had the S&P 500 down 0.5% and the Dow down 0.25% for the day. So quite a bit of damage. At least it is good to see the NASDAQ closing off of its lows for the day, finding support where we needed to see it. But once again, Ed, early this week, late last week, we were warning that we were getting extended already again.
Yeah, we were saying heading into the weekend, last time we were on this video together, we're talking about, when you combine the earnings and the lack of breadth and the market being extended, maybe not be a great time to buy. And I think anybody who bought on Monday, that was sort of the issue. Probably they're maybe underwater to a certain extent. The indexes don't look too bad. Yeah, the NASDAQ bounced off its 21-day line. The Dow and S&P didn't even get to their 10-day line. So you can't look at that and be too upset. The issue is more that some of the leading stocks came under pressure today. Some of them came off of lows, but if you're just a little bit above and then the stock drops 5%, 7%, 10%, you may be forced out, or still you're sitting today with some serious losses.
That's right. And a quick look at IWM, which tracks the Russell 2000. So down again today. So a little bit of resistance around this 220 level. We have a trend line that we've also drawn. It's below that and closing the day roughly 3% below the 50-day line. So continued weakness there. But with it being earnings season, that's something to keep in mind, because this week's reports with all of the big companies, that potentially could move the market.
Yeah, and I'm not sure that which scenario is better or worse, because if the big techs really do well, the market will look extended just in a moment. It'll take no time at all.
Right.
And if they don't do well, what do you want? Do you want Apple, Microsoft, and Google to tank? How is that going to help the leading stocks? Ideally, you'd have them sort of go sideways for a while, but in the middle of earnings season, really, that's not too realistic. So I think just people should be careful about new buys right now.
Very well said, Ed, and we will keep tabs on those earnings reports. But you mentioned UPS weighing on the market today, so heavy volume to the downside here. UPS gapping down 7% for the day. So what was it in that report that really spooked investors?
Yeah, this one at first, okay, they beat views. Oh, it's down a little bit before open. Okay, doesn't look too bad. And then all of a sudden, it really started selling off. And it became clear, well, U.S. revenue growth was a little light, but maybe one of the really big issues, that shipment volume in the U.S. and worldwide, it was down. So, they've raised prices, but actual shipment volume is down, especially on residential packages, maybe suggesting that e-commerce boom is sort of waning, and probably not a great sign for the economy either. At least that growth may be slowing after really heating up as it rebounds from the pandemic. That hit UPS, but a lot of other stocks too.
So if this is a stock that maybe you bought the last earnings report, somehow survived it coming all the way back down to the 50-day line, and you decided to hold, some investors who aren't familiar with our sell rules may have seen this and wanted to hold and hope that things get better. But what should they be doing?
Probably if you bought on that gap up, you've essentially saw the gain wiped out. Who knows exactly where it closed, but when you have a double-digit gain, and it looked like it probably was, it was at some point, then you don't want to see that go to zero. And it would have been very difficult not to see it go to zero because it gapped down like that. But you just don't want to see a double-digit gain do that, and you want to get out. If you were a longer-term holder, you could still hold. But this was really not good action, just plunging like that, maybe suggesting a character change. in the stock. I mean, it's early in the week, but it was certainly seems like a decisive break of that 10-week line.
Right. And a potential warning sign for the market, but we will have to see how the week progresses and how all of the earnings reports are digested by the market. There's still a lot to go. And we have PayPal with earnings on the horizon, as you mentioned, Ed. Shares down about 2% for the day, but finding support at the 21-day line, where it was able to find support in the pullback that we saw at the beginning of last week.
Yeah, I mean, this one looks fine. I mean, there's nothing, this hasn't done anything wrong. It found support where you'd like it to. Yeah, it came down. You know, if you bought there as you're drawing that line, okay, you still got a decent gain, and you can, it's not too hard to hold. But if you bought on the breakout, the official breakout, well, at one point you were probably flatter down, and you may be basically up 1%. So that's your cushion heading into earnings. So that's something, we tend to like it to see a cushion of 10% or at least 5%. This is just a tricky area if with that kind of position with PayPal or any other stock, especially if it's a large position. I think investors need to think about it if holding into it, because you just saw with UPS, looks like a nice little tame stock, these nice little moves, and then there it goes down 8%. So you just have to be aware that's possible. It could go up, but it could go down too.
Yeah, managing risk, it's something that we always come back to. It's extremely important, and especially in earnings season, to know what that expected move is. But even still, if you have that worst case scenario planned out, that doesn't mean that that's exactly what's going to happen. So you just got to be prepared for anything during earnings season. And yeah, what type of hit would you be willing to take in your portfolio with a certain size position? You got to be prepared for that.
Exactly.
Okay, and Mittal, ticker MT, ArcelorMittal, that is holding up really well today in the face of the downdraft after a gap up in Monday's session, when it gained a little bit more. It gained about 1%. Let's see here. My cursor is not working with me. About 5%. And so a fractional loss today after that. So holding up well after a 5% move on Monday. And we have earnings just 2 days away for this top steel producer.
Yeah, I mean, steel producers seem to be coming back, but a really nice move. It basically went to almost to the bottom of its base and then ran up over 5 days. So really big move. I wouldn't have been surprising on a day like today to see a bigger sell-off. But if it breaks out ahead of earnings, you probably want to be very cautious and not touch it, honestly, because earnings are coming up and you just don't know. It'd be great if it could have strong earnings and then break out. Then that risk is off the table. This was our stock of the day, so definitely it's in a group that maybe it's bouncing back, but you don't want to jump the gun and do that ahead of earnings. You're just playing, you're just sort of rolling the dice at that point, and that's what we've been.
Yes. Well, I cannot hear you, Ed, for some reason. You're on. There you go. Now I can hear you. But yeah, we've seen some heavy volume, which is nice behind the recent move to the upside. So we'll have to see. Can earnings be that catalyst for a breakout to new highs? Do these metals and mining stocks have more left in them after extremely strong moves since last November?
Yeah, and I think that's the question. So there's a lot of steel and mining stocks that are reporting this week and next. So it'll be interesting to see if that can be an area that investors want to play in again.
Yes. And we've also seen a lot of really interesting moves among IPO stocks. And that is a hot area to keep tabs on as well. And we had a webinar today talking all things IPO gold rush with Ken and Justin. If you missed that, make sure you're keeping tabs on our webinar page at investors.com. You can go to investors.com/videos. If you scroll down, we have a playlist of all of our past webinars there that should be up on that page tomorrow. So a lot of great information, I'm sure, from that. And the coverage continues of earnings season over at investors.com. So make sure you head there for the latest, and we will see you back tomorrow morning on IBD Live. We'll see you then.